Hello, my name is Manny Kagan. I'm a mortgage master, founder of Money Solutions Academy, and I'm privileged to have a very special guest, JD Meadows. We know each other for how many years, God knows.
Oh, at least 15 or so.
15 years. And JD Meadows works for Ameris Bank. So it's a real bank or it's a mortgage bank?
It's a real bank. Ameris is an actual FDIC depository with branches in the southeastern U.S.
So now they just here operating as mortgage bank, basically, in
Yeah,
the sense.
they're doing wholesale here.
Yeah,
Correct.
wholesale. Yeah, okay.
Yeah,
Yeah. The difference between wholesale and retail is, let's say, if you go to Bank of America, they do only retail or major banks. But banks we are operating, they work on wholesale. Wholesale means that our compensation is built into the interest rate what lenders quote us, so there's no competition, and it allows us to offer many different tools, loans, programs for our clients. And because it's a bank, they have nuances or special niches which other banks do not have, other mortgage banks. Before we started, I asked JD how's business, and he says it's slow here, but it's people are buying in other states.
Yes.
But then they have programs which might help borrowers and buyers in our state. So you want to share what they are? And I see the list here.
Sure. So the again, we're a depository bank, and so we have our own money to lend. We're not lending someone else's money. And so we have proprietary programs, which in the mortgage biz are called portfolio programs. And we have a great A-paper jumbo ARM program.
A-paper means that it's not no, Q, no, it's QM loans basically, right?
It's QM, and also A-paper means it's subject to traditional underwriting.
Yes.
But it also has good pricing. It's
Say
going to be
tax
better
returns, etc. All this stuff. Okay.
Exactly.
Yeah.
Exactly. So, and Ameris's portfolio ARM program is called The Edge, and it's just a great program in many ways. It's very first-time homebuyer friendly, which I think, right now I read something like 40% of the deals are first-time homebuyers right now.
Really?
So, something like that, yeah.
Yes.
So it's important. And again, this is compared to jumbo programs that you would get walking into a retail bank, or even the jumbo programs that are available through the pass-through wholesalers. This is going to be way more first-time homebuyer friendly because the trade line requirements are easier, because you have to have a certain number of trade lines was reported so many months, and our guidelines are way more relaxed than the other jumbos.
And what's our qualifying ratios?
For this program, it's 43 because it's a QM loan.
So now it's because QM 43 is the standard ratio?
Yes.
Really interesting.
Yes.
Because when you talk about jumbo loans are limits above conforming, which are set up, and you have to know it depends on number of units. But jumbo loans have qualifying ratio, which is ratio between principal, interest, tax, insurance divided by your verified income, not more than 43. And it becomes sticky point because it's 43 and a half, it might not go through.
Correct.
Yeah.
It's 43.00.
Exactly. At the same time, if loan is conforming, which is over 1,080,000 on 1 unit buildings, you can get ratio up to 49%.
Correct.
So it depends on the loan amount, and this determines either it's conforming or jumbo.
Correct. The other great thing about, and so the 1,089,000 limit you were talking about, that only applies to the high-cost counties in the U.S.
Correct.
So the vast majority of counties, their conforming limit is 726.
I didn't think this about it because here we only have.
I know. We have that bent here in the Bay Area, but for the rest of the country, it's 726.
I see.
So, so for lending in other states, or even in parts of California where they don't have high balance limits,
like Sonoma, for example,
Sonoma, San Bernardino, things like that, it's a very useful product. And our product allows another thing that makes it a unique jumbo product, and again, first-time homebuyer friendly, is the LTVs we offer. So LTV, do you want me to define it?
Yes, please.
LTV is your loan to value. And so, your purchase price is, say, $1 million. And you have a 20% down payment, which is the norm.
Yes.
And
Norm for whom?
well,
I've seen advertisements, the FHA offering for 100% financing. So it's not
True.
norm. It's just
true.
Yeah.
Yeah. Well, 20% down is the amount you have to put down to avoid MI.
Now we're talking. Yes.
And MI is mortgage insurance, which we should explain doesn't insure the borrower. It insures the lender in case the borrower defaults.
Yes.
So,
does it allow CLTV? In other words, can it be second behind the first?
Yes. It does.
You see, because there are lenders who offer second loans up to 89.9% or even higher now.
Correct.
At points that if, let's say, the client has only 10% down, and the Ameris Bank can still do the first, there'll be different interest rate because when they combine two loans. But yes, you can buy it with less than 20% down.
Correct.
And you're not going to have mortgage insurance in this case because it's a separate entity.
Exactly. But the LTVs that we offer for the loan are, well, for loan amounts up to $975,000, we'll do a 95% LTV, which means your borrower only needs a 5% down payment.
But it's not a jumbo loan, is it?
975 is if you're not in San Francisco.
I
remember,
see that.
if you're in San Bernardino or Sacramento
I got
or
it.
Utah or
It's a good point. Okay.
Texas, right?
So it's not 20% down. You can, but those loans have mortgage insurance, 95%.
They do, but the great, again, it's a portfolio product, and we do what's called reduced MI. So there is MI, but it's about half the cost of normal MI.
I see. Okay, which makes more feasible. Okay.
Yeah, it's much more affordable.
But 5% down, you can buy somewhere that property sells for, let's say, $1 million, and you're putting 5% down, you can get in.
You can get in. Exactly. Right. So, and
it's good to know.
Yeah, and again, very first-time home buyer friendly, low down payments. Another great thing about it that's very first-time home buyer friendly is the reserve requirements for loans up to $975,000 is only 9 months reserves.
You say only. We have to understand this part. It's critically important. When we talk about jumbos, most of the jumbo loans require reserves, which means it's not money you need to use, but you need to have it. It can be retirement account, and it can be separate account. There's certain rules how it's calculated, but you do need to have reserves. So this brings, you need to have down payment, you need to have money for the closing costs, and you need to have reserves, which is not money. Now, you can use down payment as a gift, correct? If you have 5% of your own money?
You have to have 5% of your own money, and after that, you can give gift.
You have 15% gift, but you cannot use gift for the reserves. So you need to have your reserves, your own money, so it becomes a little bit complicated.
Yes.
But it can be done.
Exactly. So, and like you were saying, the reserves can be in different forms. So, for example, it can be your 401k, it can be IRA money, it can be brokerage money at like a Charles Schwab account or an E-Trade account or something like that. Or it can be your regular savings at Bank of America.
Yeah, but you need to have, you cannot use all of it. It's a percentage off, let's say 60% if you have a retirement account.
It's actually based on the type of funds. So if it's cash, it's straight 100%.
Yeah, of course, yes.
If it's retirement and it's in a stock or bond account or a mutual fund, something like that, then you're correct. It is restricted to 70%.
70%. Well, but that's, again, it's our work, our figuring out how numbers work.
Exactly.
That's why clients come to us. Otherwise, would need us, right?
Yes. But again, it's only 9 months reserves for a first-time home buyer for loans up to $975,000. And again, the norm for jumbos is a minimum of 12 months reserves.
I have seen exception. I've seen 6 months, but again, different programs, different numbers, and this makes a difference.
True.
Because what Ameris has, they have very low interest rates. They have programs unlike other banks I'm dealing with.
Correct.
So this is a huge advantage, and we'll talk about rate in a second.
Exactly. Well, especially when you're trying to meet that DTI requirement.
The DTI, it's debt to income. You know, it's a qualifying ratio. Yeah.
The 43% we were
Yeah,
discussing
yeah,
earlier.
yeah.
If you have to keep your debt to income ratio on your expenses below that threshold, because our rates are lower,
Yes,
it's easier
to
to
qualify.
meet that
It's
requirement.
perfect, perfect. Yeah,
Exactly.
and again, we'll come back to interest rates.
Okay. Another great thing about this product, and this is for your buy-up buyers, is that we only require reserves on our subject property. So if I own my current home and I'm buying up to a new home and I'm going to keep my current home as a rental,
Yes,
I don't need reserves on that property. I only need reserves for the property I'm buying.
it's, I say, good to know, because this makes a difference. Some lenders, you have to show reserves on all the properties you own. It can be challenging.
Yes, and quite a large figure just to have
Yeah,
sitting in the
exactly.
bank
Yeah,
after you've made your down payment.
correct. Yes.
Exactly. So let's see, what else can I say?
So we're talking about first-time home buyers,
Okay.
and you know, one of my plans, I want to do a seminar for first-time home buyers,
Okay.
which is anything you say, it's ammunition to present to clients. But basically, I want to go back to, because limited time, to interest rates. I'm working now on transaction which I was mentioning before. It was a bridge loan. Clients sold their home. Now we are refinancing. They are using the money from a sale to lower the interest rate. And Ameris Bank is doing their new refi loan. And what is the interest rate? I mean, I don't know what happened after yesterday drop of the stock market.
Oh, I have no idea.
No idea. Yesterday, we were surprised that interest rates are going up, and today I read in the paper 700 points drop on it's a huge amount.
Yes.
So it affected interest rate. But when we started working on this, it was loan fixed for 5 years and interest 5.375. Remarkable.
Yes.
No, sorry, 5.625.
Okay.
Yeah, it didn't go so low.
Yeah.
Okay, good knows what it's today. Yeah, but so this allows us. Oh, that's a question. Can we qualify in 5 year at start rate, or we have to only can do it on 7 year loan?
Only on the 7 year. The 5 year qualifies.
Yeah. The reason for my question is because it can be confusing. If clients well qualifies and you go to 5 year fixed, you get a lower rate and no problem. If they're not, because the difference between 5 year interest rate and 7 years, it's not significant. But sometimes it's easier to qualify on 7 year loan. There are certain rules which we play with, and we have to know how to make things work.
Exactly.
Yeah, but
Exactly.
Ameris Bank can offer those loans which no other mortgage banks I know I don't know anyone else who can do it.
Correct. And well, that's because we don't allow other banks to sell our product. We only do this currently through wholesale. So
now it's only through mortgage brokers like ourselves. It's
Exactly.
wonderful. Thank you. Anything else? Any other goodies?
Yes. So some other, I think, first-time homebuyer
We talked
friendly
about,
items
yes.
are our requirements for non-permanent resident aliens.
Okay. So who is non-owner? What non-owner?
A non-permanent resident alien is someone who is not an American citizen and not a current permanent resident. They're a temporary resident, and those are people who are here on a work visa. So
I see. H1s, D2, whatever. Yeah.
Right,
Okay. Perfect.
exactly. There's a special category set up for people from Canada and Mexico because of NAFTA.
Yeah. Sure. So now if you don't have to be U.S. citizen to be able to get a mortgage.
Correct. You can be a non-citizen, permanent,
which is
or
whatever. Yeah, you're just working toward your green card, but you already can get your home. Wow.
Correct. Yeah.
Hallelujah. Okay.
Yeah. You need to be in the U.S. for 2 years.
Yes.
And after that, you're eligible.
It's wonderful. I read in the papers that now they extended. It's before they wanted to cancel it. Now they extend if you have a right visa, you can stay. You don't have to leave country to get renewal. You can, because employers start complaining probably that you're losing employees. Yeah. Wonderful.
Exactly.
Anything else?
Let's see.
Okay, there is a long list. I will not keep you holding, because you can see that a bank like Ameris Bank has different ways to make mortgage work. I'm Manny Kagan, and I promise I'm going to help you. Thank you.
I'm JD Meadows with Ameris Bank. Thank you.